Go ahead and get started. Wednesday, January 7th, 2026. Your host, Gerardo G. Money Pies. This is our trade lounge session here. Kind of recap what happened today in the morning, a recap and do a midweek review and see where the market will close out for this this week, right? This week of trading. Yeah, this is supposed to be a volatile week. If I go here to my forexfactory.com, let's see. We had the heavy news today, tomorrow, again, 7:30 a.m. Central Time, and then Friday, the non-farm employment change, which will add the remainder of the volatility. But again, I've always liked this volatility. It allows it flows the market. You got to be ready for it and just know how to move yourself here, and navigate yourself with the fib. But again, though, right, this is the setup that we marked up this morning. Ideally, we wanted, we were. You always got to know where you're at, right? Here's 8 o'clock, 8:15 ish Central Time. It goes to New York Open, right? How the market went down, and then from here, right, it went spiked back up, and then originally came that up down to this 1 hour drop base drop, which I'll show you guys right here. The drop base drop is basically an ETM pattern, right? That's connected to the end to the matrix. Um, what's it called? A strategy, and it's just about looking for that pattern, and kind of, it communicates to us that the sellers are in control, right? It communicates to us that the sellers are in control. So we have the drop base drop. That's the equilibrium level. We want price to come back to it and then go back down. So ideally, right, we want something like this. Okay, but over time, right? Let me go to the school, and I want to show you guys if on the classroom, if you have access to the ETM Academy, I put some screenshots in here. And basically, the one we're looking at is the drop base drop. Okay. Every ETM candle has a control, an entry, and how to risk manage this. So the drop base drop pattern, it's simply that right here. Once you spot it, control, that means we're looking for sales. All right, where do I enter? So ideally, right? Ideally, you look at the base for entry. At the base for entry, and then from there, your stop loss at the high, right? How do you risk manage this? Well, it all depends. From the entry zone to the stop loss, how many pips is that? And that's your risk management there. If you're an individual like, you know what, I like to enter at halfway of the entry zone, well, you enter halfway. You can enter at the high, above it, and but again, the whole, what's the movement going to give us, right? It's technically a drop, right? A base or an equilibrium, and then a drop. Market comes back and then does this. So this is the ETM pattern, and there's multiple of them that are here, right? You have we have three bullish ones and three bearish ones. So today, after the whole top down analysis and everything, we decided to go with the 1 hour drop base drop. Okay. Welcome in, Andrea, and Pablo. So we decided to go with the 1 hour drop base drop. But look what happened again. That's why it's also important to understand things by scale, right? Because this big engulfing candlestick, there's volume there. Okay. So in the past, I didn't used to know why didn't the market go all the way up there. And as we continue moving forward, you see, it's 8 o'clock. Yeah, correct. So 8 o'clock, and we actually sold, and we took profit at 28 today. We took profit at 28, and then the market decided to push back up, then come over here, right? And then eventually start trending down now. So the question is why did it did it sell too early here, right? So and it goes back to using the fib for consistency. Okay. So if we just simply measure this candlestick by itself, all righty, we measure that one candlestick by itself. And yeah, we measure that candlestick by itself. Let's see how price walks around the area. So it pulls in, it touches 50, 38% zone, and then actually comes down and touch all the way down here. And then because towards 8 o'clock, yeah, here goes the 8 o'clock right there, right? Because we slightly closed below 23%, I had a good feeling like, okay, we're going to push back down one more time. And then it did, but eventually, boom, it goes all the way back up and it actually touches the drop base drop. But most specifically, what I've noticed over time with these drop base drop patterns as I go back to this one, there is a lot of volume at the open of those of the pattern. The opens have a lot of volume in there. When price goes, it likes to hit the open and then return and then get a reaction. So with that being said, right, here goes the drop base drop, and look, price comes in and just gets the open of it. And then actually that was the last high that it did. And then from there, it went back down. Okay, so um during New York session, today's price action, we actually got the sell, but the move for the day, I think it was a buy. Okay. The move for today was a buy. And let me show you guys why I say that. Okay. So if we rewind back a little bit, perfect. Okay. And let's look at the New York movement. Okay. We'll look at the New York movement by itself. We were able to get a good amount of pips, right? We were able to catch the trade, I believe, on the sell. Where did we catch? I think we caught it from a 2 minute, 5 minute flip zone. Let me just double check here. Where's my flip zone at? Was it that? Yeah, it was right here. Let me go to a different chart right quick. I guess this one's fine. Okay. We were able to catch the move, guys, today. Um, let's look at the link. I'll share it with you. Right here, speed. All right. So we were able to catch the move from this rally-based rally flip zone, which ultimately on the 2 minute time frame was uh yeah, see how it gapped down here on the Saxo chart. Forex.com actually gave us the cleanest setup. I just lost the move right here. Yeah, this chart is not the best because it has all this movement. But anyways, we had a setup right here, right? So this is the movement here. The news was right around the corner, and we created these three consecutive bearish candles. We pulled in about 38% of these three consecutive, and boom, all the way back down. Our take profit was 44.28, and we were able to catch some good pip movement from there. I mean, that was still about a $14 drop, right? Which is a 140 pips, which is very good. But the strong movement for the session for today's session was the buy. Okay. And this is kind of where I always try to go back and kind of check myself on that. Like, did I look for the correct move today? And again, this is the New York range. Okay. This is the New York range. And the biggest move for today was the push up. You see that? That one is the one that created the 444 range. So then I always go back and back test. Okay, so how could I have gotten that move, right? I was able to make some money here, but I was not able to catch the move of the day. So how could I have gotten that move? So there's two ways. The that I back tested and that I came into a conclusion. Okay, number one was if you go back to the session, it's 2 hour time frame. Okay. Based on what you guys know from the higher time frame candles, these three candlesticks represent the daily, right? Um, we can measure all three, but what got my attention more, right, was still Monday's price action. Monday's price action, I'm gonna go ahead and rewind it. Monday's price action is the low and the high. Okay, you measure it with the fib, like always. Boom. Okay, you measure that with the fib. That was there right there. Okay. So when Tuesday came around, we at least want price to touch the 23% or get very near the 38%. Everybody got that? That's what we want. That's what we want Tuesday to do. But if it doesn't, right, price will either see it just missed the 23% and skyrocket. Dan has a pretty good eye on this. Dan, anything you want to comment on this fib usage here?
Yeah, like we pick our zones and we definitely look for like the retracement to 23 to 382. And let's see where we're in the day. So here we are. We're looking for price at least to come back and touch the 236 minimally. And if that doesn't break it, we got this other flip zone, which is interesting. We got a break of structure candlestick here, which I look at as a kind of like a support resistance zone.
So flip zone dynamo on a break of structure candle that didn't work?
That's correct.
Okay, gotcha.
So then it became a BEC. See how that turned around?
True.
And now we have the momentum pushing us up with this structure is now where we're looking for price that came back and literally touched this level and then keep going up to the extensions.
Yeah, and there you go. That's the next point there. So if once price doesn't come here, right? It's like a web, right? Like support and resistance web. And up here is gonna go to the extensions. And it kind of almost hit the 18, broke the high, came back and retest the high, and then wrapped up the day around the extension up there. And boom, new box appears. That means we got a brand new day. Okay. So what are we supposed to do for the next day? Well, for the next day, we do the same thing. If we're expecting the candlesticks to keep trending, same thing, right? You fib the now this is Monday, Tuesday. That's just Tuesday's price action. Okay. So what are we looking for? We're at least one for price to do the same thing. Can it come back and retrace the 23% level? And then maybe, right, we'll start looking for entries at 38 or even at 50% or even, at 61%. This is kind of our area where we're expecting this, correct? So Monday closed, Tuesday closed. Now here comes Wednesday's price action. and prices, okay, it came to the level. It actually did touch 50% one time, and we got a decent reaction. That was, I mean, that was a here to there. That was a 120 pip move already, 120 pip move there. So, but the momentum or whatever reason was still very strong, and price continued going lower. And again, we're back testing as well. How could we got the buy? Okay, and price kept pumping down. It went to the 78% level, right? The deep discount level, and push price back up to the 38%. Remember, in order for price to reestablish itself back bullish, what does it need to do? It needs to establish itself above the 23% level, and then we can start taking off. But even though we have a bullish close for Tuesday, the supply zone to me is the 23% level. If you're looking for some sells, sell as close as possible when price does that pullback to 23%, right? And but the sellers were in control. Can anybody tell me here how are the sellers establishing themselves control? Um, if not, we'll let Daniel answer. So I know he sees it already.
I see it. I see it already. Yeah.
So how did the question is how what candlestick pattern is present in front of us that are giving the sellers some control? We'll give you guys about 10 seconds here. Maybe you can't type it in, but if not, what do you see, Daniel?
I see this impulse, these bearish candlesticks.
Mm-hmm. Yep.
There you go. The Las Vegas negras. There you go.
Yeah,
Trace, the
yeah. The
trace
last the
candlestick.
last three, las tres velas, yes. Las
Yeah.
últimas tres
I
velas.
can't draw, but yeah.
Correct. Yeah, so the three consecutive bearish candlesticks, right? There's actually four, but I always count the last three, right? So this is one, two, three. These three kind of behave like a little bit of control that can push the market, continue pushing the market down. Okay. And if we, even though we have a bullish fib on Tuesday, if we draw a range from those three candlesticks,
Yeah.
you see, and even if we put a fib on those three candlesticks, it came in and touched the 61% of that little control. And then from there, see, price touched the negative 18 and it touched the 272.
And it
Okay.
also gave us a lower low. It gave
And
us
yep,
a
correct.
lower. Yeah.
Yep. And then also we finally touched
Yeah.
that
That's the-
23% level, right?
Yep.
Of Monday.
Exactly. Spot on.
Okay, let me go to the hour chart. There it is. So to me, that's the reason why we were able to pump up stronger, because we finally touched the 23% of Monday. Yes, we took out the low here, we took out the low there this previous day. Definitely volume there. And but again, though, right, we pumped back up. So that was one of the reasons for the buy, right? How we could have gotten the buy today. We got the sell, we won from the sell, but the buy was the strongest one based on the session. Based on the sessions, that was the strongest move. So that was reason number one. Long story short, we finally touched 23% of Monday. Okay. The other one, a little bit more technical, right? A little bit more technical, but it's the same explanation. Is that I've been using heavily the 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 New York Impulse. The New York Impulse has been a consistent thing that I've always monitored, but I never monitored with an intentional strategy, right? And the New York Impulse is very, very powerful, simply being that you do measure the New York Impulse I have the New York impulse from 7 a.m. Central to 8:30, and I monitor that range. Okay. For those of you guys knows who the fib, Pablo, misma situación aquí. The fib has extensions, right? The retracements, the extensions, but it also has extensions at the bottom, which you can add to them. Okay, let me put the other fib in there just so you guys can see it better. Okay, there it is. Okay. Let me hide some of the other things just so they won't be in the way. Session one, we can keep that. Asian, delete that, and the inputs. So right now, all we care about is the New York impulse. I wanted sells because the structure momentum timing was bearish, and therefore we sold it, right? But this New York impulse was bullish, right? So a lot of times, right, on a bullish fib, you have to kind of surpass 1.272 to really establish your low. And in this scenario, there it goes, and see it turned around. O digo, sí, la estructura es bajista, pero el impulso de Nueva York en este horario es bullish. De las 7 de la mañana a las 8:30 fue bullish. Entonces, por eso puse el FIB de esta manera. But yeah, so basically, whenever price made the low, it grabbed its own liquidity from here. And basically these little in between the 1 and 1.272, it's like a miniature lower low that literally likes to reverse price. And that is exactly kind of where price reversed back up. So we got the little sell from around here to there, but the move of New York was the buy. Obviously, it was a little bit trickier to catch, but it was there. And then at the 1 hour chart, right? And that's what gave us our push up to the drop base drop, which from there, right, is kind of where we're selling from right now. Let's see here. Perfect. There it is. Okay. So the question is, right, where is price going to go? Where is it going to go tonight? Where is it going to go tomorrow? And we're gonna literally just do everything all over again with the top-down analysis that I like to do. Okay, so let's just let's put it like this: weekly chart. These three candlesticks are catching my attention, like so. Okay, is it mine a live chart? Yes, I am. Okay. All right, perfect. So these 3 weeks are catching my attention. We retrace back there, and that's the first thing that's catching my attention here. As always, right, we like to take the previous weekly high and the previous weekly low, and we use that as our support and resistance higher time frame ranges to monitor the chart. Here we go to the 4 hour. Perfect. All right, so remember, this is 50% of those three candlesticks. And here I will write down weekly candles, weekly control, and 3 candlesticks. Okay. Perfect. Okay. So I'll draw 2 fibs. I'll draw a fib on these 3 consecutive candles. Boom. Previous week. And then I'll draw a fib on the actual previous weekly candlestick. Right here. Beautiful. Okay. So if we notice closely, right? Price actually found some resistance at the 23% of the big range. So that's the resistance. So that's the supply level, guys. The supply level on this bullish impulse. And we're also at the 78% of the previous week. So that's also very interesting. Let's put into the 50%. So for starters, guys, I think we could potentially come back down to 50% of the previous week as a target one. And as a target number two is 50% of this big range. Okay. Right here. So this is 50% previous week. Perfect. All right. So now let's kind of review the 2 hour charts. Okay. And see how everything else looks inside. Adam, any input here before I continue on?
No, it's actually we're spot on right now that I can see. And what I find interesting is this previous this week right in here. These three candlesticks is our literally we got a BEC basically, or at least an engulfing candlestick with bears in control. So and then we made the pullback to the 786, which is institutional levels, which we love. And then, if we can make the extensions, that's, go for its previous weekly low first would be my third target on the way down.
Perfect. And just a quick comment here, guys. Okay. Let me go back to the 4 hour chart. Okay. So why am I using fibs on candlestick by themselves, right? Aren't you supposed to use them on structure points and so forth, right? You sure can, right? But check this out. If this is a high, okay, and if this is a low, and if we consider this a swing, there goes my fib right there, right? Here goes my fib from high to low in that scenario, okay, which is the same fib right here. Well, that same movement alone is the previous weekly candlestick right there. You see? So on a smaller scale, it's a structure swing, but on a bigger scale, it's just one candlestick and represented by the weekly candle. So that is why I found a lot of consistency measuring candlesticks by themselves, more specifically the weekly one and the daily one. Okay. So now that I turn back on my sessions, higher time frame stuff here. So where could price go? So one of my first targets, right, is still this 50% of the previous week, which is price line. Put that there. Oh, price line 44.12. If this 44.12 level does not continues, it breaks, we can go down back again to 50%. Actually, we could practically go below the 50% and back to retest the high of Friday. So we did a break, retest on Monday of Friday. Maybe that's a good level right there, Dan. What do you think?
Yeah, that's totally a acceptable level. Like I said, that's why sometimes you look for multiple take profits. And so if you have an open trade, so to speak, if you know how to place your trades with, like say you have a 0.03 lot size and your goal is to hit 50% of the big three candlestick pass, you can always close out like 0.01 partial, take a partial. So my big first level to look at is around there's a target, which is around the 50%, which is my favorite level to look at. If it passes the 50 and keeps going lower, then my next level would be the 236 and the previous weekly low. And that's how I view them. And I think that's pretty close to what you look at too.
Yes, absolutely. Absolutely. So then now let's take it down one more notch and then let's just focus in on Wednesday's candlestick. So remember, this is Monday's price range. This is Tuesday's price range. And then this is Wednesday's price range, which is Wednesday's candlestick, right? So simply we just measure Wednesday's candlestick from high to low. Okay. And we're starting to establish ourselves below the 23% of that candlestick. I think once we can establish ourselves with a few closes below, our opportunity is right there to take us down to Thursday's target, which simultaneously is the extensions of that previous day. What do you say, Daniel? Bada bing, bada boom.
Bada bing, bada boom. And that'll also give us a nice impulse, correction, impulse.
Yep, exactly right, man. Exactly right.
And it even came back and touched the started off at the 50%, which is always my entry level anyway. Which is really cool. I like that. I'm looking forward to trading with y'all on Friday. I won't be on tomorrow. I'll be heading to the hospital again tomorrow morning. But yeah, it's gonna be good. I'm looking forward to get back into trading because now I get a few doctor's appointments out of the way.
There you go, man. But yeah, there it is, guys. That is the midweek review. We do have heavy news tomorrow, and also Friday, so just be mindful of that. But technically speaking, right, there goes the target. I would like for us to see if we go to 44.04. We have in our favor Thursday's price action that is bearish. We also have in our favor that price may want to balance out about 50% of the Monday's candlestick, and that all lines up right there, okay, in that area of equilibrium. Once we get there, price may get a bullish reaction, but we'll see. We take it from there. But that's closing out for today, guys. Today we started 30 minutes later than normal. We'll see how it plays out this month. Start at 9:30 Central. And if not, then we'll go back to the original 9 o'clock time frame. But we appreciate you guys. If those of you guys who are part of the live trading subscription, we will be back again tomorrow at 8:15 Central Time. And then we'll see you guys in any questions. We have the school that you guys can join for free and have access to more content that's available there. Have a good one. Danimal, thanks for the help, man. Have a good
You're
night.
welcome. Always a pleasure.
My pleasure.
And just one more thought I just had.
Go for it, Dan.
The London session could even bring us down to this level.
Yeah,
and
man.
that pushes up to the test, go the other direction, which is
True.
interesting.
True. That is very true. New York reversal.
Yep. I've seen that happen.
All right. All right, guys. Have a good night.
Good night.